How can socially conscious people like us, how can we fix our broken financial system that currently favors big banks, traditional corporations, and the super rich to a system that looks out for us average American citizens without using politicians or regulations? This is the question we ask on the Crowd Effect podcast. I am your host, Paul Lovejoy, activist investment advisor at Stakeholder Enterprise. So, without using politicians or regulations, this is a key component to the question I just asked. And why do I include that? Well, a number of reasons. And let's start off with a Gallup poll that was released in 2020 that tracked, that asked average Americans the honesty and ethical standards of various careers. And at the very bottom of the list were members of Congress. Last place. 63% of respondents uh, gave the rating low or very low when asked about the honesty and ethical standards. Now, that's horrible, 63%. But that very same year in 2020, small donors that gave less than $200, gave $1.8 billion to congressional campaigns. By itself, this doesn't include presidential, state, or local elections, just congressional campaigns. All right, here's the kicker. A study by Princeton and Northwestern universities called Testing Theories of American Politics, Elites, Interest Groups, and Average Citizens found that us average Americans have a statistically non significant impact on determining public policy. So our vote counts when for who gets elected, but when it comes to which laws get passed, it appears that our vote doesn't count. Obviously, this is a huge problem. In the study, they found that when us average Americans want a law passed, it passes 30% of the time. When we don't want a law passed, it doesn't pass 30% of the time. Now, let's compare that to uh, corporations and the super rich. In this very same study, they found that when corporations and the super rich want a law passed, it passes over 50% of the time. And when they don't want a law passed, it doesn't pass over 70% of the time. So you can see that there's this huge difference between influence of us average American citizens and the corporations and the super rich. It appears that when they want law passed, and when they want our democracy to work, well, they have influence and we don't. A statistically non-significant impact. Okay. Um, now here's another problem. So we say, okay, let's vote out these politicians that aren't listening to us. Well, we can and we do. But according to opensecrets.org, there are currently 460 former members of Congress that are either lobbyists or senior advisors for lobbying firms that go on to advocate for, guess what? Corporations and the super rich. Okay, this is a big problem here. And on top of that, there's constantly these government shutdowns, blaming that's going on. They're pitting us average American citizens against each other with this divisive nature, so they can get more money for their reelection campaigns. It's horrible, and it's kind of ugly to watch. I don't enjoy watching any of the political process at all. I just don't have any confidence in it at all. What I do have confidence in, I believe in myself, and I believe in the American people, and we have the tools now to solve our own problems. We don't need to rely on our political process anymore. Now, I discovered something called a market-based approach. Now, this is contrary to the political approach, which most people look to solve our problems. We say, "Oh, we need to do something," and oftentimes things do get done, but there are unintended consequences to regulations. And I've talked about this, about how big banks get regulated, and the reason why big banks get regulated is because they're under this immense pressure to increase their profits every quarter, and because of this pressure, they oftentimes cut corners and defraud the American public. And of course, that can't happen. We can't have our banks defrauding us. So they get regulated. But then it becomes even more expensive for them to operate. And they have to do other things like offer toxic securities or just investor abuses, which lead to more regulations, which lead to higher expenses for big banks, which it puts them under more pressure to increase their profits. And so there's this cycle that just goes on and on and on. Okay, that's our political approach. There is something different, a market-based approach, and um, it really an easy way to describe the effectiveness of a market-based approach is I was reading this book called Democratizing Finance by Clifford Rosenthal, and he is a leader in community development financial institutions, specifically community development credit unions. And in the 1960s, he was on the front line of the war on poverty, and he was helping establish credit unions in underserved areas, areas that were redlined, and the disenfranchised, offering them banking services. And the problem was that the government was subsidizing the operating expenses of these financial institutions. And when and we were spending a lot of money, billions of dollars on the war on poverty. And when it wasn't working, the public, the American public was like, you know what, we can't, it doesn't work. Throwing money at the problem isn't working. Um, so we got to stop. And that's what happened. Funding dried up, and all these credit unions went under. And we were back to square one again, where people living in these communities didn't have any banking resources. So Clifford Rosenthal, along with the other survivors of the war on poverty, um, decided to do a market-based approach, and they built up these credit unions and community development banks and community development loan funds in a way that it would be self-sustaining. They got investments from largely the faith-based community, and it's interfaith. It's not one particular faith, and these faith-based investors put money into in the form of deposits into these credit unions, which allowed them to grow. And they grew. So in the 70s and 80s, it slowly rebuilt this community development financial institutions, these credit unions. They started to pop up in these underserved areas, and it became apparent that we can fix our broken financial system with this market-based approach. It was so successful that in the 90s, community development financial institutions got a federal designation. And in 1994, the Community Development Financial Institution Act was passed, giving cash awards to institutions that were already self sustaining. So it wasn't going to go towards operating costs. So if this fund if political winds shift, these institutions won't go belly up. It just gives it a cash injection to provide more services and to provide more loans and to help serve these communities even better. It's like a boost of sorts. And and so when I was reading this, I was like, man, I mean, that's pretty awesome. On top of that, there's a whole social enterprise movement. And a social enterprise are organizations that are designed to use business strategies to solve social problems. Okay. On top of that, there is a huge impact investment movement, which is investing to generate not only a financial return, but positive, measurable social or environmental impact. So you have impact investing happening. On top of that, there are something called certified B corporations, which have a legal requirement, which they've amended in 42 different states, allowing them to um, not have this pressure to constantly increase their profits. They are legally allowed to take a look at the impact that is happening to all stakeholders. Now, a stakeholder is anyone that has an interest in the success of a business. So it could be the company's employees, customers, vendors, suppliers, investors, and shareholders. The community that a company serves, the environment that the company operates in, all of these are stakeholders, and so certified B Corps do that. And they've even created this. The people who started the B Corp movement even created a new corporate entity called a public benefit corporation. So there's this shift that's already taking place. That's a market based approach, and it's a way to solve our own problems without using politicians. There's no resistance to it. The CDFI Act in 1994 that I talked about, it passed unanimously in the Senate, and there was something like 14 no's in the House. So I mean, that's unheard of today. And even recently, changing these laws in the certified B Corp movement, um, that had 90% approval rating from both sides of the aisle. So this market based approach, who would stand against that? It doesn't cost the taxpayers anything. It helps uh, our communities. They're solving real problems that are out there, and it's a way how we can fix our not just our financial systems, but other systems as well. And that's why I started my own firm, because of a crowd investing approach to redistribute wealth from big banks, traditional corporations, and the super rich to average American citizens through crowd investing. So the money that people receive from crowd investing would have gone to big banks, traditional corporations, and the super rich, because they had the lockdown on the private market of investments, which was which is where foundational wealth happens. It's where you get on the ground floor of investments. It's where uh, corporate structures are created, and this is a way to get every average American the opportunity to have a say in how our corporate structures are set up. Um, so it not only redistributes wealth, it redistributes power as well through crowd investing and through this market based approach. So that's all I'm going to be talking about for today. My name is Paul Lovejoy. I am a crowd investor, and I see you are one too.